Welcome to TradeTheMBI.com. This is John. This report is for the 6th of June, and we're starting to see a little bit of pullback into them. We had the positive extreme from right here. If we get it right underneath the lows right there, we can see that 24.27 would be at least a likely retrace, which is going to get us pretty close to the ABM value, which is pretty much the same. So at least for the yellow, and that would just cover that little overbought. And you can see that we've removed overbought even though we pressed forward. The fact that the orange has skyrocketed through, if it continues a little bit further, we could see a little bit more exacerbated short move beyond just that basic, but nothing hyper dramatic. I mean, pretty good with the shakeout readings and everything. And also we're getting a complete reset of short-term buyers, which again, not a horrible thing. We would like to see a little more improvement from the red DOC simply because that would indicate longer term trend, and at this point we should start to see some additional fund activity as far as improvement, which indicates with that steel that short-term buyers have plenty of liquidity in order to add into the situation. That doesn't mean that they're not going to look for a little bit better price before they go ahead and turn that around, but definitely something to look for when it comes to the reset and new buy opportunities in there. The NQ not suffering nearly as much, but it also has the same. It has a little bit more of an extended positive extreme that might need to get refilled. So you may see a little bit disproportionate activity if there's any selling, at least for the NQ goes. But look at that for the euro, still looking super strong. Of course, popping up here above plus 13.5 might give it a little resistance going forward, but overall that trend is still to the high side. And bonds, that was just a wild move to the upside. It's got to fill back some of that. It's already done it so far, but certainly into the extreme. I mean, plus 23 on that is pretty far up there. It's an indication that there's still some that believe sluggishness is going to be the wave, and that means more easing potentially, which kind of surprising, but this is that stalled agenda reality that's creating bifurcation in the markets, where you have what seems to be counterintuitive trades taking place. And that's an interesting one, though I still think the market is poised overall to continue to move higher, just from a multiple standpoint, and the general idea that the business environment is overall going to be easier than more difficult. And it's just going to be now a question of can anything get done as far as tax relief and things like that. The promises at some point are going to fall on deaf ears if they see continued resistance to anything moving forward. And of course you have the Comey testimony and stuff coming that could create some little volatility. So that'll be an interesting trade going forward. If nothing comes from it, I would expect that we might see, given the time frame, good bounce from that. If he's not coming out saying that, President obstructed, blah, 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 even though that doesn't necessarily mean anything as far as legal, but the political turmoil of it could hamper Trump's ability to do things. Oil, slight rebound. But coming off this, if we look at the DOC, you're still stuck in that zone with the orange and that. Complete reset, though, of from an oversold standpoint, but you don't have short-term buyers fading on it. They're the ones who've been holding this up. And the fact that orange is stuck in between there, the bias is still soft. It's an easy way to describe it, not necessarily sell, but soft at that bottom range. And gold, still pressing higher. Just beautiful run off that, following that ABM at the 120.56 range. Positive extremes in there, but with the cyan under red, that's a continuation. And from an ES5K, we had the nice little buy that came through there. It was short-lived. We started getting some peaks there. It wasn't anything serious until we broke down below the ABM. And then once that breakdown took place, it just kept going, which is not a horrible surprise. Once we got into the oversold, it's maintained. It's just now coming back. But the reality is with that orange stuck between there, we would expect that we're probably going to revisit those lows before any pop, even if it comes back up, is likely to come back and retrace that, which is fine. It's well within ranges. Nothing dramatic is taking place so far. I think there's a build up towards what potentially will happen with Comey testimony is just going to be an excuse to fill in some of the range. They always like to make excuses for the news and that, but some of these things are already pre-built in. We knew that we needed to fill back in the positive extremes on that daily, and it was a perfect opportunity given the softness and the readings to do that. So we're right in line with that. I wouldn't cause myself to be alarmed, and certainly if new buy opportunities present themselves, they're definitely worth taking. So it's just a matter of following what the readings give us and going from there. As always, though, do look for me on the Skype chat. Trade well.